Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, June 22nd, 2018. This is a market wrap. Markets have just concluded trading for the week, so this will be very brief. Not really a lot new to point out, but a couple developments and worth mentioning as we head into the weekend here and things to look for next week. Here's QQQ. Let's just focus on the daily time frame now because, as I said, I'm starting to shift my focus away from the intraday charts and now looking at the more significant daily charts. So there it is. We have, as I mentioned earlier in today's video and yesterday, a confirmed negative divergence. We have a bearish PPO crossover, first one since all the way back here, right before that drop, and the arrows show you the previous two bearish PPO crossovers. This one's coming in at high levels. So that's sell signal number one. We had a trend line break, some impulsive selling, a back test, second day of back testing, we rolled over. We had the bearish engulfing candlestick yesterday. That means the body of this candlestick on Thursday engulfed the entire Wednesday's candlestick, both the body and the shadows as well. And as I said, as I was looking for confirmation, we now have that confirmation. We have red candle today. Q is closing down about a third of a percent, so that helps to firm up that sell signal. And there's not anything I can see on this chart that tells me this isn't the best sell signal that we've had in months. Anything's possible. I would much rather be wrong on my call than to not state clearly that this is about as good as it gets. So let's see what happens next week. Market's been resilient, shrugged off sell signals before, but you just have to trade the charts, and that's what the charts are telling me right now. So that's the QQQ, and we'll just look at a couple other things and wrap this up. Wrong. Semis, nice day in the semis if you're short. That is. In the semis again, the semis lead tech, and tech leads the market. So this is all. I'm not even going to pull up SPY. SPY closed, I think, slightly green, but that doesn't matter. That is chock full of defensive issues. Those are what did well. Oil had a big pop today. That's a one-off event. Oil was up over 5%, crude futures, and so that spilled over into the energy sector, which in turn boosted the S&P 500. And of course, you have the defensive stocks that have been catching a bid lately, which is not a good sign for the market. So what we're seeing now is finally what's led this market up for a long time are growth stocks, namely tech. And tech is starting to break, at least near term. So here's stocks. Again, it was covered in recent videos, but I'll just rehash it. We had a bearish engulfing candle right here at the top. Not only was that a bearish engulfing candle and confirmed with two red candles afterwards, just like this bearish engulfing candle back here, but you can also see this is a double top high so far. This look where SOX failed. And that's, by the way, SOX is a semiconductor ETF, if I didn't make mention. So there it is. We failed there. We failed with the bearish engulfing candle. We broke down below this uptrend line right here, and have been rolling over since. We also put in a bearish engulfing candle on yesterday. Uh, completely engulfed Wednesday's candle, and some more follow through to the downside today. And something I just pointed out in the trading room, I was watching, SOX into the close today. This is a 5-minute chart. I just want to put it in perspective. Look at these volume bars. Just some crazy volume. A lot of people went out in a bad way, and this is what happens to an overcrowded, overloved trade when it finally starts to unravel. So yeah, again, anything's possible, but as of now, we're seeing a lot of bearish developments here. That's some big volume, and that started at 3:30, and it was persistent. It wasn't just one big spike, meaning one fund or one big order unloading. And obviously, you can see it was all selling. That all that volume was selling. And again, I'll scroll back. You always get a little ramp of volume into the close. You can probably see my daybreak lines here, and it's normal in just about any ETF because that's when they square away on their positions. So a lot of end-of-day buying and selling. But again, this started at 3:30, and we haven't seen that in a long time, very long time. You can scroll back here. You don't see anything even remotely close. So that's that. And finally, as far as QQQ and SOX, those are what you call risk-on ETFs. The QQQ being mostly tech stocks, very tech-heavy. That index, the Nasdaq 100, and of course small caps, more diversified industry-wide wise, I should say, many different industries. But however, these are smaller companies, so they're higher growth companies than your more established large cap companies. And so this is considered more of a risk on index. When risk's on, small caps tend to outperform. When risk is off, they tend to outperformed to the downside, and that's what we're seeing lately. We're seeing some pretty bearish developments. We had a almost bearish engulfing candle. I say almost because this candle on Wednesday was ever so slightly, the body was ever so slightly above the body of Friday's or yesterday's candle. But for all intents and purposes, it's really about the same thing. Again, you don't have to split hairs and say, okay, we're 2-3 cents higher. So no, it's not a bearish engulfing candle. You have a big red candle following a small green candle and then downside. And again, you had it on QQQ, you had it on SOX. I'm sure you had it on some other tech related ETFs as well. And again, it's also a divergent high trend line break. You can see here uptrend line break, back test, and we're starting to roll over. So that's it. If the Bulls they need to pull a rabbit out of their hat and have some kind of big stick save on Monday or into next week and undo this. What they'd have to do right now is really take out these red candles and show the market that that doesn't matter and that's just another suck in for the shorts and the bears. But this one looks better than any I've seen in recent months. So I'm still looking for more downside in the markets. And again, I'm not focused on SPY. If you short or go long SPY for that matter, you're buying or selling the most bullish and the most bearish stocks. If you short the S&P 500, you're shorting utilities. You're shorting, steady Eddie dividend paying blue chip stocks. They're not going to fall as much as tech during a correction, and especially at this point in time. IWM and QQQ they really stretched and they're out to new highs, where SPY is still well off its highs. So. We'll see what happens from there. And of course, SPY, as I mentioned in recent updates, broke this primary. This is the primary uptrend line in the S&P 500, and broke down backtested. It's been backtesting all along, but still well off the previous highs. So that's that. Let's just see what next week brings. Like I said, it's either going to be more follow through to the downside and confirm all the bearish developments we've seen this week, or maybe we'll see the buyers step in and undo that, and if that's the case, we'll go from there. All right, I'll leave it here. Keep this one short. Have a great weekend, guys, and as always, if you like the video, please give it a thumbs up on YouTube. That'd be much appreciated.